Thank you. 5 minutes after the trading day started, the S&P 500 fell 7%, triggering an automatic 15-minute halt known as a circuit breaker. That was the first time since 1997 the trading was automatically stopped because of a free fall. The Dow Jones Industrial Average sank more than 2,000 points by the end of this roller coaster day.
Tomorrow we're seeing the Senate. We're going to be meeting with House Republicans, Mitch McConnell, everybody, and discussing a possible payroll tax cut or relief, substantial relief, very substantial relief. That's a big number. We're also going to be talking about hourly wage earners getting help.
So what does the volatility mean for the economy as President Trump and lawmakers are looking to fend off any more damage? Joining us with some answers, Marc Horner, president and founder of Fairhaven Wealth Management. Prior to that, he was a financial advisor with the wealth management divisions of both Merrill Lynch and UBS. Welcome back.
Good to be with you.
Chicago tonight. You expect more volatility, yes?
We do. We do. And I would add to the historic events of today. I heard more than one reference equating today's market move to the events of 9/11 and the 2008 financial crisis, which I think those two circumstances are very different than what we're facing right now. I think there's certainly going to be an economic impact to what's going on, but I do not believe to the degree to which 2008 in particular affected the economy.
And why is that?
So the move today was equated to a time when Lehman Brothers, Bear Stearns went bankrupt, out of business. My former employer had to be bailed out by Bank of America. None of that is happening right now. I think a lot of and that was fact. That actually happened. Isn't
the key the right now part of your sentence? Right now, it doesn't look that way, but we don't know as this volatility unfolds whether right now changes.
So I completely agree, and I'd say the we don't know part of the statement is where we're really hanging our hat on. That I think there's been a much too big of a rush to extrapolate what are relatively isolated cases into much larger impact. And I think we do have some history to look back on with past outbreaks, the Asian flu and SARS, Ebola. In all of those cases, 6 months after the first announcement, the stock market actually was higher.
But one of the things that I think others are looking at are that you have low wage earners. 70% of America is a service economy. 2/3 of Americans are not prepared with pensions or 401ks. And so the risk to them, the president was alluding to it, is profound when you take coronavirus and Wall Street and maybe what was an inevitable correction.
Yeah, I think that is true. That I think we were set up for an inevitable correction. But again, I'm just not in the camp that coronavirus is going to, and the effects of coronavirus are going to be the action that unglues the economy altogether. I think the actions that it sounds like the administration is going to take to put ease some pressure on employers with a reduction in payroll taxes, making it easier for employees to get access to retirement savings plans. I think those are all good things.
Except if you are an hourly worker, if you're a per diem, you don't have one of those plans, right?
That's true, and I think that puts a light on a problem that's been in existence in our economy and our business structure for a long time, making retirement more accessible to a much broader range of participants in the economy.
You're a wealth manager. The gap between probably your clients and the rest of this country is ever widening. And right now, with coronavirus having hit China the way it did, and the supply lines between China, Japan, us, Europe, I mean, there is a real possibility of a failure of delivery on auto and other big items, correct?
I think that is possible, and I wouldn't be surprised if to see some economic impact to the economy in the shorter term. And it really does come back to we just don't know what the effects are going to be. I could imagine a scenario where these effects actually benefit the American economy for a longer term. Perhaps if there is an interruption in the supply chain from China, maybe that sets up an opportunity to more broadly distribute that supply chain around both Europe and back here in the United States. So I think to take the events of a couple of weeks with all the medical experts, which I am not, still giving very wide estimates about what the impact might be, rushing to judgment that this is the end of the economy as we know it, I think is taking things quite a bit too far.
Marc Horner, thank you very much for joining us in
Good
Chicago
to be with you.
tonight.
And now for
We
all
will
of us
have
here at Chicago Tonight, I'm Paris Schutz. I thank you for watching. Good night.